So the Fed pivot is here now. We heard Jay Powell and Jackson Hole yesterday say that the time has come for the monetary policy of the Fed to shift. What does that mean exactly? Well, in the past, if you look at other historical incidents, after the Fed started to cut rates, typically within 12 months, we saw a market crash. And the question is, how likely is this to happen this time around, or how do you prepare for these things? I know there's a bunch of videos out there from all sorts of influencers about a big short kind of trade. And if you look at it from, there are some signs, but I want to approach this topic with a clear mind. Also, I've been through many cycles. And one thing that I learned, or I want to share with you everything that I took away from these numbers of cycles. And one of the most important quote in that regard, so that you can maybe guess a little bit where my direction is going to, is Peter Lynch. If you don't know who he is, look him up. There is wisdom in extremely successful people that are out there. Of course, they don't know everything, but you would be a fool to completely ignore. And basically, what Peter Lynch said is that far more money has been lost in preparation of crashes than in the actual crashes. And this is what I believe should be the focus of this conversation here. Yes, we see Japan's stock market has crashed, right? Everybody's talking about these telltale signs that it could now actually go over into the US stock market. And now that the Fed will pivot, basically start to cut rates, while the central bank in Japan has actually hiked, that would make this Japan or this yen carry trade even more expensive and probably cause even more of an unwind of that trade, where you borrow yen for dirt cheap, basically. Then you sell the yen for dollars or for US assets, stock markets, risk assets, basically, even crypto. So that trade usually is like leveraged a lot. And that's why when the cost of yen goes up, while the return on dollar goes down, that narrows the margin. And that actually, will force some people to unwind even more. And the last time, a couple of weeks ago, when we had an unwind, it actually caused for a crash in the stock markets, particularly. Since then, we saw like a huge rally. I think 4-point-something trillion market cap have been added since that crash. And that's actually also what I would like to talk about. There is a bias, a tendency of stock markets to go up more than down. So should we prepare for a crash, or should we look at which levels could we buy? And also, what should we buy? That's, I think, is a more interesting, a more nuanced type of look at the same situation or the same opportunity. So because the problem with predicting a crash is that the difficulty isn't in the prediction, as we say in Germany, I don't know if you say it in English too, but basically, if you translate it, it says, even a broken watch is right 2 times a day. So the difficult part about predicting a crash is the timing. When is it going to happen? And when is that big crash going to happen? And again, as Peter Lynch said, far more money has been lost trying to time these things than in the actual crashes themselves. He was an advocate of be always in the market. Now, yes, we see, for example, Warren Buffett has a huge cash position. I think the biggest he's ever had. But he also said he doesn't try to time anything. What he's trying to do is to look at stocks from a perspective of whether it's a good business. And I think that approach is extremely smart. As simple as it sounds, it's actually the smartest approach when it comes to stocks, in my opinion, at least. Nonetheless, let's talk about the signs first. So there are some economic signs that we have seen. Japanese stock market crash. Obviously, the revision of the labor market in the US just this week, where they removed almost 1 million jobs that supposedly existed, and turned out, oops, our numbers were wrong. Our numbers are cooked, but who would say that? It means that the soft landing type of narrative got a good punch in the face, I would say. We continue to have war in Russia and Ukraine. We continue to have the whole Middle Eastern region on the brink of maybe an even bigger escalation. Iran, Israel, that is just relentlessly firing into Gaza without any pause or, I don't even know what exactly their goal is. But that's a topic for another day. Nonetheless, there is instability there, or there is potential for more escalation, obviously. Even more. The amount of deficit spending of the US is uncanny. Like, even the economy of the US, that it didn't go into a recession just yet, for the most part, is based on the deficit spending, the government overspending. And if there's one thing history taught us, is that governments are really bad at being productive. So essentially, I don't know the exact number, but you could say, like, for example, for every $10 they spend, they maybe increase the GDP by a couple dollars. So that's a really bad spend. And they continue to support also these wars with their money. So that's bad for the dollar. The dollar continues to be basically that they are so massively trying to inflate that currency. It's just unbelievable. Now, what the takeaway is, the dollar still remains the best currency around. I don't know any other currency in the world that, from a fiat currency perspective, is a better choice. There's only bad and worse, really. But that's why the case for assets continues to remain in place. Where else are you going to put your money? Where else? You're not going to keep it in cash. You might put it in treasuries. If the government in the US continues to spend like that, that money will rather float into businesses. Now, again, Warren Buffett is sitting on cash. Why? Because maybe he's expecting some sort of a drop. He said from a timing perspective, he is not. So he said, because he went out of Apple, for example, with a massive position, but he remained, for example, in American Express or Coca-Cola. So from his perspective, those are much better businesses. And I think that if you look at the markets from the perspective of trying to find good businesses with a good, sound business model, and then those businesses are likely to see money flow in their direction. And of course, NVIDIA has been one of these companies not because there's so much money already being made with AI at the moment. Actually, there's not. But all the big tech companies are spending top dollars, billions of dollars into developing AI, and they need NVIDIA capacities, basically. And so the most rich companies in the world that make the most money, that control all the digital economy, are the best customers of NVIDIA. So big drops in NVIDIA, just look at the chart. They've been good ones. There have been exactly, really good dip buying opportunities. So, and it also depends a little bit on, do you want to have something that is less correlated? Then it's also a bit complicated in terms of that, even if you look into cryptos, if you look into not Bitcoin, for example, that's extremely volatile. Even Bitcoin is very volatile. So Ethereum could be interesting because it's, from all the cryptos, from the big ones out there, pretty much undervalued in the sense is that, it's too expensive, it's too slow, but there is major development going on, especially for layer 2s. I was just reading, for example, today that Sony has developed a layer 2 solution on Arbitrum, which is on Ethereum, for example. And I think that the size and the adoption of Ethereum is still a proper thing. Solana is also the upcoming thing in terms of the user numbers and the volumes and the speed. Even though the TPS numbers are also something that people discuss a lot, whether they're accurately reported, a lot of people say that's not true. Nonetheless, Solana seems to be another interesting asset here, but extremely volatile. And Bitcoin has a completely different narrative. Bitcoin is this scarce asset. I just invite you. I have a video on my YouTube here where I am basically reinterpreting the presentation of Michael Saylor at the beginning of 2024 when the Bitcoin price was not even half of where it is now, I believe, something like that. And you have to study Bitcoin to really understand it. So maybe I'll do a separate video about that. Now, the problem with these pre-economic crash situations is that, look, my fundamental overall impression of the market is that, yes, we're sort of overdue. But I'm not looking to sell a top. I think, again, like Peter Lynch said, that's foolish. It's a fool's errand. You're just going to burn yourself, you're going to lose money, and you're going to probably stop shorting the moment the thing actually goes down. What I am interested in is to scale into assets that I'm interested, or that I believe to be long-term good businesses, like Warren Buffett said, and scale into them. For example, if I could imagine there is a 20%, 30% type of market crash, and I have, let's just say $10,000 or $100,000, then I would look at, okay, if the market drops 5%, I'll drop the first 20% of my cash. If it drops another 10%, I drop the other one. So scale into the position. Don't put it all in one. Or just simply dollar cost average, which means that you buy the same amount of whatever stock or crypto that you believe has a long-term value proposition, and you buy the same amount in the same frequency every week, every month, whatever works for you. Probably if people had done that with Bitcoin, I think the first really big craze in Bitcoin was in 17. In 17 it was trading at the end at 20,000. Even 20,000 today seems very cheap. 20,000 at the bottom of the bear market, the last bear market, was also there. I think we went down to 18,000, even 16,000. So, you gotta then take the opportunities when they're actually there, right? And in the meantime, stay more patient. Look, we live in a monetary policy environment that will continue to flood the market with even more money. That's been historically the case of every empire. And the difference to in the past in history is that today everyone in the whole wild world is doing it. Everyone. There's no country in the world, maybe Argentina actually, funny enough now, that is not stuck in the same dilemma. So governments will continue to flood markets with cheap money as much as they can until I don't know when. Nobody really knows. But that puts a natural bid on big drops or on asset prices. I think the only thing that can really derail that is if we saw real unrest. People going to the streets, burning down the parliaments, any of these things. Or hopefully not a world war sort of scenario. Because until then, the governments will continue to just print money, inflate their currency, and asset prices will continue to go up. Even now, by the way, the US house market is at its highest in terms of, like, nobody can afford houses in the US anymore. And that is a real problem. Like, all the upcoming generations, they cannot afford something that their parents could afford. Their parents' could afford even easier, right? So that what perspective of life does that give them? Not the best one. And that's also, it increases short-term thinking. Actually, I also saw read a very interesting analysis of the fourth turn, I think it's called, where we're now in so much chaos that the demand for structure is growing. So that's why there's actually also a big risk of an even more controlled type of system that we're in. And that can only, and usually that happens after wars. This is how we got the Bretton Woods system. This is after the Second World War and things of that nature. Now, I honestly hope none of these things are going to happen in our lifetimes, but the times I'm reading right now that it is possible. Nonetheless, what I learned from 2008 to 2009, for example, which was the biggest really crash that before has not been seen like that, is that governments, especially in the US, they immediately got together. They got these backdoor deals. Look how little it was. They flooded the market back then, I think, with 800 or 900 billion. Only today, every 100 days, the US adds 1 trillion to its deficit spending. So that will continue to happen. I don't think that we have, stressed the system so much that this is not going to be the next outcome. That's my personal preference. So that's why I look for good businesses. I look for interesting propositions for undervalued stocks and maybe even Bitcoin, for example, maybe Solana, when there's fear in the market particularly. And the important part is now, because we are very likely to see a continuation of a blow off top, as we call it. So it's important for you right now, do not over risk. Don't chase with too much risk taking, because it can in an instant turn on you. Have a clear plan. Decide what you're risking, when you're risking it, and where you're pulling the plug, at what levels when it goes down, you're willing to buy, how much. Keep your powder dry, have it ready. Warren Buffett, buy good businesses, right, at a good price, and then just ride them, hold them for almost forever, as long as they're a good business. And that is very much dependent on your skill level as a trader, as an investor. If you haven't done these things before, your psychology and you can be manipulated by the media, by social media, by your echo chamber. You're underestimating that a lot. So that's why, especially if you trade currencies like Forex, that's even different. Because look, in stocks, you have one currency and an economic, let's just say, or fundamental force. But in currencies, you have two currencies that have a billion reasons themselves to go up and down. So it's a lot more chaotic, a lot more convoluted. That's why you need to have a systematic approach, statistical edge, rules-based, clear risk management. And I show that, I have a strategy on my YouTube channel as well. I show that in my track record, how you can navigate the storms, trading that without needing to bet what the market is going to do. But you have a statistical edge-based systemized way of going through the market that gives you more in a return that you are risking. So that's basically what's happened here. So, by the way, if you have any questions about the current situation, maybe some assets, whatever, drop them in the comments. I'd love to, read your comments and give you my personal views, maybe give you some direction. No financial advice, obviously. And if you're interested also to understand how actually systemized statistical edge-based trading works, meaning your profit that you're making is based on numbers, on statistics, on real, tangible, objective stuff that is not just an opinion, but that's actually shown in the data. If you're interested to learn how that works, and you could do it actually in a couple of minutes a day. It's not more than that. You just understand how it works exactly. You train how to do it. You make it work for yourself, and then you just show up and execute it, and money this way. I'm proving it. I'm showing it actually. So if you're interested in that, then I offer a mentorship doing these things. I do one-on-one personal coachings as well. I want to keep this to a minimum because I want to keep also personal aspect obviously very, very much the priority. This is not something for everyone out there. This is only for someone that really is willing to walk the walk actually. But it's a skill set for life. It put me through many crashes, up and down, crypto, stocks, currencies, whatever you want, and gives you a freedom lifestyle if you do it the right way. So yeah, that's basically my views on the current market today. If you have any questions, use the comments, and I'll see you in the next video. Thank you very much.